Hey guys, this is Dave from MortgageGuy.com, and in this video I'm going to break down the biggest reason why I'm able to close 100% of my bank statement loans, and something you need to keep in mind if you're looking to get one. But before I do, please subscribe to my YouTube channel to keep up with more videos like this. Bank statement loan. This is where you're usually a self-employed buyer, and instead of going off of tax returns like for a regular loan, they're gonna go off of the deposits for your business bank statements or personal bank statements. Now, the general rule on these loans is about only 60% of them close from a market standard. Meaning, once they go on underwriting, about 40% of them get denied. That's very concerning. I have closed 100% of my bank statement loans, and I've been doing bank statement loans before even COVID. So it's something that we know and we're experts on. And the biggest thing that many loan officers do, and I'm dealing with it right now, is when they do a bank statement loan, number one, do they have any experience with them? Many of them will say we offer it, but they haven't closed any. If you're looking for a bank statement loan, that's a question you need to ask. How many have you done? How recently? Give me some stories of ones you closed. Don't just say, have you closed a lot of them? Yes, I've closed a lot of them. Give me some examples. What did the people do for a living? Things like that, right? I've done them for doctors who own businesses, car dealerships, lawyers, landscaping companies, the list goes on and on. Many loan officers, and the biggest issue you're gonna run into if you have problems with this loan, is they're gonna take the 12 or 24 months bank statements, because you can really do it either way, 12-month history or 24 months. They're gonna look at deposits and say, oh yeah, you're fine, there's enough income in there. This is the wrong way to do it, and why I do it differently. What I'm gonna do is I'm gonna collect those bank statements and I'm gonna submit it to underwriting. Underwriting is gonna come back and tell me the income we can use. The general rule of thumb is 50% of those deposits. I've also gotten exceptions where I can use 70% of those deposits as your income to qualify. So if you are depositing $10,000 a month, 50% is $5,000, 70% would be $7,000. Now, here's the other thing. Underwriters are gonna review the bank statements and see if the deposits are in line. If you're depositing $10,000 a month, $10,000 and whatnot, and then you have a random large deposit of $100,000 and no other history of large deposits, they're going to remove that deposit from your income, or ones that they can't figure out where they're coming from. So the underwriter is going to determine this. This ends up being an issue where many get denied because the loan officer is just eyeballing it, saying, hey, the overall deposits are okay, while the underwriter is going to review it. So we're going to have the underwriter review the income. They're going to give me the exact amount of income that we can use. With that, you're pretty much off and running on your loan because the credit has already been addressed, down payment has already been addressed. It's that income component that can get your loan denied. So we're gonna put that work up front. It may take a little bit longer, but we're gonna get that information confirmed, and then you're off and running, make an offer on your home, and 100% of my bank statement loans have closed based on this approach. And I wanted to go over it with you so you know when you're getting a bank statement, this is something you absolutely have to take into account and use an expert with them. Hope you found that information helpful. If you did, I would love to be your lender. Subscribe to my YouTube channel and keep around for this next video. I think you're gonna like it. Thanks, guys.